Welcome to Sustainability Unplugged, a podcast by Olive Gaia. I'm Jessica Scopacasa, and in today's episode, we take a closer look at the real estate sector, one of the world's largest asset classes and a critical player in the net zero transition. To explore how ESG is reshaping real estate investment strategies, influencing valuations, and driving access to capital, I'm pleased to have as today's guest, Wesley Thompson, partner, head of ESG MENA at Knight Frank, one of the world's leading independent real estate consultancies. Wesley is an accomplished international sustainability expert who has advised multiple sectors, including sovereign wealth funds, governments, investors, and industries, fostering partnerships that transform sustainability challenges into actionable solutions. Wesley, welcome to Sustainability Unplugged.
Thank you, Jessica. Very, very, very glad to be here.
So let's start. You've been working in sustainability, as I just said, across sectors and regions for more than 2 decades now. After the strong momentum that we saw with the launch of the UN SDGs, the rise of youth-led movements like Fridays for Future, and even the first post-pandemic COP26 in Glasgow, today ESG seems to be facing its toughest headwinds. Yeah. What are stakeholders still getting wrong about ESG and sustainability, according to you? And why is that almost 10 years after the Paris Agreement, climate action is slipping off the agenda for some policymakers and, of course, in turn, business leaders? I mean, we're just after the UN conference and we heard all Trump's speech. So any idea of what is happening in the climate space and in the sustainability space today?
Yeah, thank you. Look, it's a good question, and obviously a lot of people asking it at the moment. The reality is there is a bit of a growing misconception, I suppose, in that ESG is just a tick box exercise or it's a compliance burden. I think the reality is, ESG is a significant business driver in the sense that it boosts not only just efficiency, it increases efficiency, it can spark innovation, it can strengthen the employee engagement and attraction and retention of employees. It builds stronger customer trust. You're closer to your customer by default of applying these ESG principles. And most importantly, to a large extent, it secures investor confidence. And I think the real issue in some instances is that it's assumed to be this burden. It's something that people have to comply with, and almost in some cases they feel forced to do that. So they will only tick the boxes that they need to. But those that are embracing it and seeing the true value for what it is are seeing considerable transformations in their organizations. And the point is not just about improved operational efficiencies, but it applies a greater focus on the environmental impacts that the companies have and regions have, the social impacts, including things like wellness and other factors that are now critical, especially to your point, post-pandemic, and then also overarching governance, which is never a bad thing. It ensures there is some form of overarching authority monitoring these ESG principles. So I hear a lot of backlash over the years, and having done this for well over 2 decades now, I've heard it all over the years about how this is not real. It's all made up. I think that what I try to focus my energy on these days is not about trying to convince those that might not see it the same way. Everyone has their opinion and entitled to it. I think the reality is, however, it's about coming up with solutions in my mind. So I tend to focus my energy and efforts towards finding solutions to these issues, as opposed to trying to convince that this is something that's. To answer your question, I think it shifted a bit, but it certainly hasn't slowed the momentum. 10 years, we've seen considerable changes and transformation in technologies, even perceptions from different individuals and people, and that knowledge and growth that we're seeing around ESG awareness has really transformed the industry. And we do have a lot of regulations out there. We do have a lot of dedicated, to your point, the different COPs have allowed people to put some fairly heavy targets in place. The realities, however, now are that we have to deliver on those. And that is what I think we're seeing now, is people going, how do we do that? How can we improve these things? So I feel as though it's not slipped. It's just we're in that working phase of now pushing forward. And there's a lot that needs to happen, but I wouldn't discredit it as not being progressive. I think we're moving fast, I think.
So that's an interesting point of view. So on one hand side, definitely there is still a lot of education and awareness that probably needs to be done across various sectors and regions. But at the same time, also, it's actually time to see some results and to implement and take action beyond developing strategies and making commitments, if I understand correctly what you're saying.
Absolutely. This is not a shortism view. This is a long-term play. And I often refer to, leaders like myself and other people out there. You are custodians of regions, of companies, of, your teams. And the reality is you're in place to ensure that there's a future, for that business, for that region, for everything. And it's undeniable that this has a profound impact. And the small things, small measures we do today, particularly at this very critical stage, have a very profound impact in the future.
Absolutely. So let's turn now to the real estate sector, which we know is a major contributor to global greenhouse gas emissions and is also faces issues which are quite challenging to tackle, like embedded carbon lock-in. We know construction hasn't traditionally been known as the most progressive sector. Usually change happens slowly. I wanted to ask you, how has the industry approached sustainability so far? And where do you think it stands today, especially if we think of what we just discussed? Do you see the shift on the ESG front in terms of global policy playing out in this industry as well?
Yeah. Again, very good question. I think the real estate has been historically a bit of a slow mover, and you're right. I think the urgency is absolutely unavoidable, and a majority of people will accept that point. I think it's important to just understand in context why it's so important. The recent statistics that have started to emerge give an indication of that. It's nearly just over 37% of the global energy related CO2 emissions comes from the built environment. So that's a significant proportion. Um, about real estate, if you put into perspective, 27% of that tends to come from the operations. What that means is things like, heating, cooling, lighting, and other factors. And then when you talk about embodied carbon, this is the materials that have gone into this process. Now, this is being historically not very well looked at and is changing very rapidly due to some laws, due to competitiveness and other factors, and generally demands coming from the real estate sector. But that accounts for 11% of that, 37% from the construction side, and that's when I say materials, I mean things like cement, steel,
Yes.
aluminium, and so on. So the general consensus is, going back 10 years, I remember having a conversation with a developer that said to me, Wesley, I'm sorry, but we get it. We understand it's important. If we don't see a $3 return for the $1 spent, this is our model, then we just can't we can't invest in this.
Mhm.
I had this conversation with the CEO of this developer about a year ago, and I said to him, "Do you remember that conversation we had about the $3 return?" I said, "It's interesting to see you now have a full team of sustainability and ESG people in your business, and your whole business is sustainability orientated." And he said, "You're absolutely right." He said, "The interesting thing is it's not about the $3 return." He said, "I couldn't get the $1 anymore." It's a shift in the investor's perception. Green is not an optional factor in the market anymore. It's a license to operate. This is where I think there's been a real shift in the mindset. And real estate is a long game. Assets are there for a long term. On average, nearly about 80% of the buildings you will see around you will be there by the time we hit our net zero targets from different regions. And those that are building new infrastructure right now, you have to factor this in, because otherwise you're not going to hit your regional targets. Different regions have different approaches to this, but it is becoming absolutely critical to embed ESG in the early stages, and where viable, look at retrofit to ensure prevention of stranded assets in the future.
That's very, very interesting. And actually, I wanted, in fact, to narrow down the conversation to the MENA region, where, of course, you're currently based. Understand how the regional construction sector is doing from a sustainability point of view. I think you partially already answered this question. The next one is really to understand then how do we fare compared to other regions like Europe and the US when it comes to sustainability? Do you think that there is still a gap to close, or are we starting to see the playing field level out?
Yeah, I mean, this region is transitioning very, very quickly, and there is often a little bit of misconception that that it's not as sustainable as people think. I mean, the reality is the proof of the momentum that we're seeing here is that if you take the UAE, for example, the built environment contributes to roughly about 28% of emissions, and you might say, well, how are you transforming to that? Because obviously a lot of buildings are new, but have also reached their point where they probably need a retrofit. So different perceptions, comparisons, where in Europe you've got buildings that have been there for, in some cases, hundreds of years. So it's a lot more difficult to do some of the things that need to be done. But, the UAE is still in the top 10 countries regionally for a number of LEED certified buildings, outside the US. And Dubai itself is ranked third globally for the number of green and LEED certified buildings. So I think it's approximately about 550 plus or so that have LEED. Now that's significant. So comparatively, we are Dubai is one of the most sustainable cities in the world. Saudi is transforming at sort of breakneck speed in the sense of they have a significant growth plan, and with that they've got very ambitious targets. So, Vision 2030 has changed a lot of the way people think and helped to accelerate the transformation. We see that with a lot of these very large gig projects, which are enormous in scale, a huge master plan. And ESG, to a large extent, is actually embedded into a lot of what they already do. But the difficulty we experience, I think, in this region compared to others is the ability to align with the international frameworks and reporting out there. We spoke about investor perception, them looking into the region and going, how do I compare this to, I don't know,
Yes.
buying something in New York or whatever. And that's what I think is going on right now. It's a bit of a catch up of that to start to align with these international reporting standards, start to do and take the very good work that's being done here and phenomenal work, and being able to put that in a packaged way that you can actually do that apple for apple comparison against equivalents out there in the market. And so I personally think it's incredibly progressive when it comes to sustainability.
Right. So you just mentioned investments. So we know that global ESG, of course, is influencing capital allocation. So I wanted to understand a little bit more about whether or how this dynamic is currently unfolding in the MENA region, and whether regional institutional investors and sovereign funds are currently prioritizing ESG in their real estate strategies, according to you.
Yes, is the simple answer.
Mhm.
I think they really do. It's not just good practice; it's practical. So if you look at if you want to attract these international investors, and back to the point, you have to meet international certifications and standards, because that's what they will look at. That's how they are able to do comparisons. And what we're seeing here is the regional sovereign wealths, ensuring that the companies under their portfolios and the approaches to market are in alignment with some of these standards, and remembering these standards and the way in which these are viewed. It's not just you can tick a box and say, okay, I've signed up to that. It's actually monitored. There's clear defined approaches you have to adopt, reporting requirements you have to provide. So it's an ongoing process, and it's laborious in some cases.
Mm.
And I think that the struggle is sometimes with this is you get so caught up in trying to report what you're doing that you stop actually doing what you're meant to be doing. And actions, so to speak louder than words. In this case, it's a combination. You can take action, but you have to report it, and you need that independent certification. So there needs to be more standardization in the way some of this is done, particularly at a sector level, in steel and cement and other things. But the reality is this: there is a lot of capital available, a lot of sustainable finance that's floating around in the market. Regionally, everybody wants to attract that finance. We want to attract the big international investors to the region. It's a very attractive proposition right now. But we are seeing sustainability and ESG playing a key role in that. I'm speaking holistically. If you look at real estate more in depth, we conducted an ESG survey recently as Knight Frank, and we identified that almost 90% of the people who responded to that do consider ESG as a core factor in their consideration of investments, be it at a residential or be it at a commercial office space. And applied also to occupiers. You want to attract big international occupiers to the region, and you have to comply with the regulation side. So I think we're seeing a very strong and very attractive proposition right now in the region. It is competitive, and sovereign wealth funds are doing a lot to try and transform this region into meeting all those standards and really demonstrating and showcasing the ESG credentials. So I think it's exciting, but it is very much a part of what they're looking at.
Wesley, then what advice would you give to those real estate developers or corporates in the region that are still treating ESG as a compliance box ticking exercise to turn this into action, to turn this into actual business advantage and value creation?
Yeah. So I think the advice is this: it's not compliance. It's not just a tick box exercise that needs to be part of the process. My advice is this: is really look at, clearly define what ESG means to you as a business. There's standard approaches to these things, but actually define what it means to you, and very quickly you'll realize, hey, we're doing quite a lot of this, but how do we look to improve it? And you start to create focus around that. So that means, the creation of a strategy, clear indications and KPIs and roadmaps that understand how you're going to achieve these. But more importantly is to break this mold that ESG and sustainability equals significant costs to the business and resource and financial. It's quite the opposite, in fact. If there is an element of cost, but there is significant value creation that comes out of it. And it's those that are getting ahead of this that are going to see, serious competitive edge, and particularly over the next decade of growth. So, it's one of these. You're not being forced to embrace it yet, but the reality is it's those who are embracing it because it's the right thing, because they can see the value in sustainability and how it drives lower costs, potentially increased valuations. We are seeing anywhere between 10 to up to 40% increase in valuation from a leasing perspective, and in some cases in sale. It's more resilient assets. So if you look at insurance premiums, you can reduce your insurance premiums. Climate-related impacts have had significant rise in insurance premiums, directly due to the climate impact and resiliency of infrastructure. So there's real opportunities there, but it's got to be a mind shift change from seeing it as just this. You've got to be ticking the boxes. You've got to just achieve a certification and compliance to how do we ongoingly operate that asset? How do we create an awareness program with our tenants, with our buyers, with the communities, and really embracing it? And those that are reaping the rewards and will continue to do so, because it's not going to go away. This perception, it's not. It is only going to become more relevant and potentially more costly. As they say, rather get on top of it before the train leaves the station than try and build a train, midway through your journey.
100%. And we're already discussing the future, so where we're going. So I have one last question for you. Looking ahead, what do you really think will define the next decade of ESG and climate action? Are there any specific shifts from maybe a regulatory or technological perspective that give you hope? And what should businesses start preparing for today to stay ahead?
Yeah, excellent question. The reality is this: if you wait around for regulations and that's it, that'll come. It's not what that looks like, who knows? So I don't think it's the right approach to things. I think what will really change is consumer demands will increase around this. Awareness of consumers, which is ultimately the end customer, will continue to be more educated on these things, and their requirements will become more stringent and require more transparency. The game changer really is, I alluded to it before, is the transformation in technology. AI is has a significant part to play in sustainability moving forward. Human error is obviously one of the key factors as to why things don't always function as well. AI, and I mean that from a building perspective, and I think to that extent, AI has a huge part to play in optimization and reduction of that operational percentage I mentioned. It can improve supply-demand dynamics requirement. There's a lot of waste that comes out of construction. You can imagine a world where what you don't use could immediately be sold off or moved off to somewhere else where it's required and so on. In some cases, construction materials, over 35% waste that comes out of the construction itself, and your embodied carbon element. So having a full circularity approach to things will only be complemented by AI. There's other things like 3D printing, which is, I think, modular housing playing a significant part. I know in the UAE now, 25% of all new buildings must be 3D printed by 2030. Now, that's quite a significant regulation change, as much as it is a technological shift, because these are quite significant bits of kit. So, we're going to see more of this happening, and it's exciting. The only factor I do always think of is from a climate change is AI and data centers. They take up an immense amount of power, immense amount of consumption and energy. And, whilst technology plays a big part in reduction of and transformation in sustainability, it also has its own part to play in what we're seeing now, which is a new revolution to some extent. And in that side. So I think technology is the big player. Regulations will play their part, but I think one of the biggest will be the consumer demands that shape technology requirements and innovation.
Wesley, this has been such an insightful conversation. Really, thank you so much for joining us today on Sustainability Unplugged.
Thank you. Much appreciated.
I hope you enjoyed the conversation, and if you did, stay tuned for the upcoming episodes. Until next time, I'm Jessica Scovacasa, and this is Sustainability Unplugged by Olive Gaia.